building significant wealth rarely happens by accident. Those who successfully grow their net worth over time tend to follow specific patterns of behavior that compound into substantial financial gains. While get-rich-quick schemes promise immediate results, actual wealth creation requires patience, discipline, and adherence to time-tested principles. Understanding these 4 strategies can put you on the right path to build lasting wealth. 1. They invest consistently. The power of compound growth. Wealthy individuals understand that investing isn't just about making good stock picks but consistency over time. The mathematics of compound growth favors those who start early and maintain regular contributions. When you invest consistently, your money works for you around the clock, generating returns that generate additional returns. Historical data shows the S&P 500 has delivered average annual returns of about 10% before inflation since its inception. While past performance doesn't guarantee future results, this illustrates the potential power of the stock market over long periods. Someone who invested $500 monthly for 30 years with an 8% average annual return would accumulate over $745,000. Even though their direct contributions only totaled $180,000. Savvy investors often practice dollar-cost averaging, investing fixed amounts at regular intervals regardless of market conditions. This strategy removes emotional decision-making from the equation. It allows investors to purchase more shares when prices are low and fewer when prices are high, potentially lowering the average cost per share over time. Diversification across asset classes further strengthens this approach. By spreading investments across different sectors through indexes like the S&P 500, wealth-building individuals protect themselves from sector-specific downturns while positioning themselves to benefit from growth in multiple areas. The most important aspect of consistent investing is simply starting. The difference between beginning at age 25 versus age 35 can amount to hundreds of thousands of dollars by retirement age, even with identical contribution amounts and returns. Wealthy individuals recognize this time advantage and prioritize getting their money working as early as possible to benefit from compounding capital gains and dividend reinvesting.
2. They live below their means. Strategic spending for maximum savings. One of the most common traits among wealth builders is their tendency to spend less than they earn, often significantly less. This isn't necessarily about extreme frugality, but about making intentional spending decisions aligned with long-term financial goals. The wealth-building mindset approaches consumption differently. Instead of spending in response to income increases, lifestyle inflation, wealthy individuals maintain reasonable living standards even as their earnings grow. This creates an expanding gap between income and expenses that accelerates wealth accumulation. Strategic spending involves distinguishing between assets that appreciate and those that depreciate. Wealth builders tend to limit spending on items that lose value, expensive cars, luxury clothing, latest gadgets, while directing resources toward assets that grow or generate income. This principle often manifests in housing. While middle-income earners frequently stretch their budgets to buy the largest house they can qualify for, many wealth builders opt for more modest homes relative to their incomes. The difference in monthly expenses can be directed toward investments with higher growth potential. The psychological aspect of delayed gratification plays a crucial role in this strategy. Wealth builders derive satisfaction from watching their assets grow rather than from immediate consumption. They understand that temporary sacrifices lead to greater financial freedom and options in the future. Financial experts often recommend maintaining an emergency fund covering 3 to 6 months of essential expenses. This financial buffer prevents the need to liquidate investments during market downturns or take on high-interest debt during emergencies, both situations that can derail long-term wealth-building plans. 3. They invest in themselves. Continuous learning for higher earning potential. Perhaps the most overlooked wealth-building strategy is the consistent development of personal capabilities. Wealth builders recognize that their knowledge, skills, and expertise represent a form of capital that can generate substantial returns through higher earning potential. The correlation between education and lifetime earnings is well established. According to economic research, additional education typically increases earnings potential, though the specific returns vary by field and individual circumstances. However, formal degrees represent just one form of human capital investment. Wealth builders continuously acquire skills that are in demand in the marketplace. They stay attuned to industry trends and proactively develop expertise in areas that command premium compensation. This might involve technical capabilities, management competencies, skills in sales, or specialized knowledge within their field. This approach extends beyond career advancement. Wealthy individuals often develop financial literacy, investing knowledge, negotiation skills, and business acumen, competencies that directly impact their ability to grow and manage assets effectively. The digital age has dramatically reduced the cost barriers to skill acquisition. Between online courses, certification programs, podcasts, books, and mentorship opportunities, valuable knowledge is more accessible than ever. Wealth builders take advantage of these resources, often dedicating several hours weekly to personal development. The compounding effect of skill development mirrors that of financial investments. Each new capability builds upon existing knowledge, creating opportunities that wouldn't otherwise be available and opening doors to higher income brackets throughout one's career. 4. They diversify their income, building multiple revenue streams for financial security. While the average person relies on a single paycheck, wealth builders develop multiple income streams. This approach accelerates wealth accumulation and provides insulation against economic downturns and job loss. Income diversification typically evolves in stages. Many wealth builders start with a primary career while gradually building additional revenue sources. These might include rental properties, dividend-paying stocks, business ownership, consulting work, content creation, or other ventures aligned with their skills and interests. Certain tax advantages are also a factor in this strategy. For instance, qualified dividends and long-term capital gains are taxed lower than ordinary income. Wealth builders keep more of what they earn by developing income sources with favorable tax treatment through 401(k), S, or IRAs. Real estate is often prominently featured in income diversification strategies. A property that generates monthly rent while potentially appreciating represents current income and long-term growth, a combination that aligns perfectly with wealth-building goals. The growth of the digital economy has created numerous opportunities for building scalable income streams with minimal startup costs. Wealth builders can now establish additional revenue sources from online businesses to content platforms without significant capital investment. Even modest additional income can dramatically impact wealth accumulation when consistently directed toward investments. An extra $1,000 monthly invested at 8% would grow to approximately $360,000 over 15 years, an amount that can meaningfully change one's financial trajectory. Conclusion: building wealth doesn't require extraordinary intelligence or large amounts of starting capital. Instead, it demands consistently applying four fundamental strategies: investing regularly, living below one's means, continuously developing valuable skills, and creating multiple income streams. These approaches work synergistically. Higher earnings from skill development provide more capital for investments. Living below your means creates a surplus for investing and developing new income streams. Additional revenue sources accelerate investment growth. The compound effect of these strategies, which have been applied consistently over decades, leads to financial outcomes that might seem impossible when viewed from the starting point. The most crucial element in successful wealth building isn't the specific investment vehicle or business venture. It's the long-term perspective. Wealth accumulation happens gradually, then suddenly. By focusing on these proven strategies and maintaining patience through market cycles and economic changes, you position yourself to build lasting financial security and freedom. If you don't subscribe our channel, you may not see us again.